him on high. That's right.
Yeah, and he was also in Colors.
Was he?
Yeah, because he's
Sean Penn.
Yes.
yeah, because he's named Pac-Man, and he
Yeah.
sprays the guy.
That's,
So
do-
Bruce, you're
do
good.
your,
That's good radio, man.
products include any real estate offerings or
Well, you know,
that
we
type of thing?
Alternative
Not-
investments.
Alternative investments.
we yes and no. Usually not. I mean, I have some clients that want to be in hedge funds, and then we help them sort through those, or private equity.
Mm-hmm.
I try to avoid that for most clients only because it's a very long-term strategy. You give your money to a private equity person, and you wait 5-6 years and cross your fingers, and it can be quite effective, quite
Save this.
financially successful. But in the meantime, you have no control. So
So primarily you're sticking to
Liquid
exchange traded and
yeah.
mhm.
You know, we have a fund that we invest in called Antley Capital. They buy mortgages,
Mhm.
right? And it yields 16% today. It's residential mortgages
Yeah.
and leveraging those, we're just like a bank does, in a way to generate over 1% per month return. And so basically, you can be in something that's about $100 billion or more.
Yes, I am.
Yes,
Yeah.
you're good.
So they buy mortgage-backed securities.
Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Brian Burke, and we're in the studio here with Bruce Robbie. And we asked this first trivia question when we went to commercial break. What movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? And the hint was the main gang tried to get back to Coney Island, its base. Mark, I know you know the answer to this one.
Oh yeah, I remember that movie because you're right. There were all kinds of fights in the theaters. Even when we were watching it here in Marin County, it was warriors.
Yeah, that's right. Remember that one guy goes, "Warriors come out to play." And he kind of takes the bottle.
That was creepy,
That's a
yeah.
great movie.
I
though.
gotta say I missed that one. But
You missed that one. Okay, well, go rent it.
I know.
It's
on
actually kind of
Netflix,
fun.
it's great.
Netflix.
Yeah, it's a fun
classic.
one. Okay, Bruce, what other not allocation? What other advice you want to share with our listeners?
Well, I think we were talking earlier, Edward, about where do we go to find some income, and it's a real challenge. But there are some places we don't just have to give up on the strategy and put our money in a money market account if we're willing to accept some level of risk. So, the stock market's coming back. We've seen that. Looks like maybe it's got some legs to it. I can't tell you for sure, but you could look at preferred stocks, which pay very high dividends, and also these dividends are preferred. And so that sort of investment gives you the best of both worlds. The preferred stocks are yielding at about 6% dividend right now, and also the preferred stocks themselves tend to track the stock market. So if the market gets better, then you're going to benefit in that way. Now, it's not risk-free, of course, but it's a way to kind of split the difference between buying some bonds that may have very low returns or putting your money in the stock market that might have more volatility. So that's something we like. You could also consider, there's a couple money managers out there that are very good at managing bond portfolios, PIMCO being the largest in the world. They have a couple funds that we think are attractive. One, their PIMCO Income Strategy 2 is a strategy that invests in floating rate debt. So if you're worried about interest rates going up, and we all think someday that's going to happen, we haven't seen it, but maybe someday that will, a strategy that invests in floating rate debt will be able to benefit from rising rates because the debt they own will step up. And so you have that, you avoid the risk
of the losing principal. If
losing
interest rates
principal,
go up.
exactly.
Yeah.
So that might be something you want to add to other strategies. I think we've heard a lot of negative news about mortgages and how volatile they are and home foreclosures. But there's some great funds that invest in mortgages that are guaranteed by Freddie Mac and Fannie Mae. And these mortgage REITs, we call them, trade on the New York Stock Exchange or over the counter. They're yielding between 14 and 17% right now, which is incredible. Incredible returns over 1% per month.
Why are they yielding so high?
Well, their model is much like a bank. They borrow money very cheaply at very short-term rates, and then they buy mortgages. And then they borrow more money, and they buy more mortgages. And the mortgages are yielding about 3.5%, and they're borrowing money at close to 1%. So they leverage that up about 6 times. Now, banks were doing that leverage to 20 times, but say 6 or 7 times, and they get to those very high returns. So this is a fund you have to watch carefully. If short-term rates go up, obviously, that will reduce that return. Fortunately, we've had some guidance from the Federal Reserve that they're going to keep short-term rates pretty much at zero through 2014.
And that is traded on the exchange, on the New York Stock Exchange?
Well, one example, the largest is a company called Annaly Capital, and that is a security we own. I'm not saying it's right for everybody, but it has a very high return. Today it's about 16%.
How much volatility has there been on there?
Very little. In fact, the 5-year return on that stock right through the disaster of 2008, the 5-year return is 15% per year.
That's
so
amazing.
That's not so bad. So and it's yielding 15% today. So
and it's liquid.
And it's liquid. You don't like it, you hit the button, you get out of it. So that's an interesting strategy. I think municipal bonds, we talked about those, is something people should consider. And finally, corporate bonds are not the end of the world. If you buy a corporate bond fund, a high yield fund, you can still get a close to 3% return on a diversified fund of corporate bonds. So I think the real strategy is to take all of these different strategies and blend them together. By taking 6 or 7 strategies, you've kind of protected yourself, and you can net out with an average return of over 5%.
And you've got your diversification. in there, too.
Absolutely.
Well, you were talking about the interest rates and where they're at and then the volatility. So what do you think will make interest rates rise, and when do you think that might happen?
Well, that's a great question. And how we know, it's hard to forecast when the economy is going to get better, but typically the Federal Reserve tries to keep inflation in check, and all at the same time they don't want to destroy the economy. And so since we've had some guidance, unlike we've ever had before, that they're going to keep the short-term rates low for a couple of years now, we have some comfort that we can step into some of these investments that have potential risk if rates go higher. If we see the economy really accelerate, we're going to see the Fed become more defensive, and they will raise the short-term rates to slow the economy down. And that's what they do. I don't see that happening this year, probably not next year, but that's the kind of thing you have to monitor. If we see a massive growth in our economy beyond the 2% that's forecast for this year, which is kind of a very slow recovery, then you get more defensive. But until that happens, frankly, I think we can be a little bit, take a little more risk in our fixed income strategies to pick up the income that's well above the alternatives of having your money at the bank or in a CD.
Now, Bruce, your company, how do you guys make your money?
Well, we are a fee-based investment manager, so we charge a management fee based on the size of the accounts that we're working with in our client relationship.
Can you share that with us?
Our fee?
Yeah.
It depends on the size of the account, but it can range from 1.25% per year down to less than 0.5% per year, depending on the size of the relationship.
Okay. Any other questions, guys? Any other allocations?
Asset allocation, our
Yep.
favorite topic.
Great.
What do you think about REITs, Bruce?
Well, we talked a little bit about the mortgage REITs, and I think that's a great way to participate in the real estate market by owning mortgage-backed securities instead of owning real estate directly. We've actually seen the real estate market recover quite a bit. Commercial real estate, when you look at the real estate investment trusts that people can invest in, those have had pretty nice recovery. There's a lot of risk in commercial real estate that I'm not sure is appropriate for most clients, because the income now that comes off of these REITs maybe is not as attractive as it once was. An area that we think is quite attractive as an alternative is the master limited partnership sector of our economy, which is driven by oil and natural gas discovery and distribution. I know we've all heard about the massive increase in natural gas that we've discovered in our country through new processes of getting the gas out of the ground. Nearly doubled or almost tripled the amount of natural gas we thought we had, and we're seeing a huge boom in the pipeline companies that distribute the natural gas, not the companies that own the gas, but the companies moving it around and breaking
How come the
it
price hasn't gone down?
Yeah,
Well,
right.
natural gas prices actually are at a 10-year low. It's the gasoline, which is driven by
Okay.
oil. So we're seeing natural gas so cheap, we're going to see it as an alternative source. And there are ways to invest in master limited partnerships that are yielding about 6 or 7%, which are
We
pretty
just got to figure out how
attractive.
to put natural gas in the gas tank.
Right.
Right.
So Bruce, how concerned are you about international events like what's going on in Greece right now with?
Big issue. In fact, we saw last year, we saw the corporate earnings of the S&P 500 companies growing at about 15%. And then at the same time, we saw the market drop 20% between April and September. So, it's a global marketplace, and Europe is a major trading partner of ours and China's. And so when we see major problems, even in a small country like Greece, it affects our financial market. So we have to have a global perspective, even if we're investing in U.S. companies.
Do you want to predict the Dow by the end of the year?
Yes, we do predict the Dow. We have a contest every year, and we never get it right. But
Well, just give us your personal opinion.
well, I think
no guarantees.
I think my forecast actually at the beginning of the year was about a 12% return for the Dow Jones this year. We're up about 6.5% today. So, I think this could be a great year for stocks in general. Earnings are slowing down. They still will be the highest they've ever been for the S&P 500 companies. And we know that the Dow peaked out coincidentally on my birthday, October 9th in 2007, at about 14,160. So, I think it's possible we can get back to those levels. assuming we don't have one of these unexpected black swan events that seems to appear every so often.
And relating that back to interest rates, doesn't it seem that as the stocks do rise and people gain more confidence in equities, they pull their money out of bonds, and that causes the interest rates to rise for the long-term rates?
It's possible. It's just, that's true. At the same time, that's why you have a diversified strategy of having, an allocation that includes stocks and bonds. And depending on your risk tolerance, maybe that's 60% equities and 30% fixed income and some commodities. But you don't just go all in one or the other. You need to balance those assets out so you benefit in any scenario.
All right, Bruce Robbie from Collins and Company, thank you so much. Stick with us because we're going to talk real estate, and I'm sure you're going to have some insight in that
Some
too.
disagreements, maybe.
Exactly. Yeah. That's okay. All right, we're going to cut to the second commercial break, and here's our second trivia question. Again, it's gangs in the movies. Name this 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube that takes place in South Central. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Name the 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube, and takes place in South Central LA. Call 888-912-1190. Make sure to include your name, address, email address, and remember to speak slowly and spell it out for us, and we'll be right back.
I'm going to have to go with Boys in the Hood.
Yes.
Nice.
That's it. Very good.
That's it.
Nice.
I couldn't remember that.
I
That was
cheated.
good.
I cheated.
Oh, you lie. Boo, boo, yes.
He's
It's
over
called
here
using
like-
technology to your advantage.
Yeah, that's
With the
right.
iPad,
Yeah.
look at that.
That's too funny.
You
That's
want to watch
awesome.
the trailer? No.
Yeah, right.
It's a good movie.
Yeah, that was a good movie. Yeah.
You can slide the headsets down if you like.
Oh, yeah, so to make
Okay.
people...
I like the runway picture you have on the front page.
Oh, and my daughter took that. Yeah,
Is that right?
That's I have a little airplane that's landing in Little River, up in Mendocino County.
Yep.
Runway
Yep.
29,
That's
yeah.
a pretty long runway for
It is.
a general
See it,
aviation
Bruce?
runway.
What's that?
Let the audience see it.
Oh,
This
are we on the
audience.
video? Okay.
Okay. Here I
Yeah,
am.
we'll see that.
Yeah.
Oh, it's
No,
okay.
we fly up there a lot. I've got a house up on the coast there.
It's a little bit foggy.
Just a little, yeah. It's
Just a
clear
little
enough
bit.
to land, but
Yeah, yeah.
they get fogged there all the time.
Yeah, that's interesting. What kind of plane do you have?
It's a Cirrus. It's
Oh.
a little plastic airplane.
I have one myself.
Oh, you do have a Cirrus?
Yeah.
Everyone's got, everyone's got airplanes except for him and me.
Yeah. Well, we can fix that.
Yeah.
Yeah.
Not that hard. Yeah, I have my planes in Sanderville at the Sanderville Airport.
Yeah, Smith Ranch.
Yeah.
Oh, very, very cool.
Yeah.
Yeah. Well, it's.
I've been in an airplane once.
Have you?
I've seen one. Yeah, I'm
There was a
actually been in a
smaller
helicopter.
plane once. Yeah,
Yeah.
we were
Actually, my
taller
daughter was flying at
friends,
this point.
so-
I'm kind of afraid of the things.
Oh, great.
You said autopilot.
Yeah, that's right.
I remember
That's the
when we
nice
went
thing about a
to
Cirrus.
Direct enter.
when we went to Phoenix.
Yeah, exactly.
We went to Phoenix, and then we were going to go do the Grand Canyon. And rather than doing all the drive,
Yeah.
it was we drove to a place that took us to a van to go into a small airplane.
Yeah.
That took us in a little helicopter to give us a little boat down the river.
Nice.
I mean, every kind of possible. I just wasn't on a space shuttle.
Yeah.
That's the only-
That's the only mode of
And I
transportation
didn't walk.
you can take.
Yeah.
I go, take me everywhere.
All right.
That is too funny.
So Santa Rosa, that's a nice airport.
It is.
Yeah.
Yeah, it's great. We got less, and we don't have to worry too much about.
The weather big, yeah, lots of big runways, yeah.
Yeah, it's got a nice big runway. It's got.
Oh, yes, I'm sorry.
Is your office up there?
Makeup, please.
Yeah, I'm in San
Makeup.
Okay.
Yeah.
It's too hot in
Yeah.
here.
Yep. So it's 15-minute ride.
things
up
I
the-
have to go
up the
through.
road.
Oh, yes.
And,
Yeah,
and I
that's
have to
nice,
rent
yeah.
this hat
I
from
used
my
to be in
friend here.
Knoxville.
That's right.
That's
I ran
true.
it for 1 hour.
Oh, right. Yeah.
You know, if I
Traffic on
take
half
off my
minutes
shoes and
or-
socks,
I
I'm
learned
going to
to fly
massage my
at
toes
Knoxville.
too.
Yeah.
Yeah, did you?
we don't have.
Yeah, it's like when I flew in a World War I biplane. Scary.
Oh,
Yeah.
No parachute. Just I go, where's my seatbelt? And literally, it's like it was one of those little tiny clip things. You just gotta push down and clip on.
I fly helicopters too, and flying those without a door.
Yeah,
So
that's
you're in
that's
this,
cool.
and there's about as much room as there is between here at Bruce and I.
Oh, yeah.
And there's no door.
Well, okay, but yeah, you have a seatbelt.
Seatbelt,
though.
yeah.
Got a
You have
seatbelt.
Okay, question for you on that, because someone told me, and I wanted to verify this with you. If you run out of gas, as long as you're still up,
No.
is that true? You won't crash
No.
because the wind
No.
will take the propellers still?
No.
Yeah, you can get down.
No.
You have
Yes, no, no,
Never
no,
happens.
yes.
you have about 1.3 seconds in an R22 before you have a rotor blade stall, and if the rotor blades stall, it's unrecoverable. Yeah,
You'll come down.
You'll come
That's
down.
right.
You'll come down quickly. But see, that's one of the things we
But
do in helicopter
you're gonna
training.
come
We
down.
spend a lot of time doing the engine out practice, and you cut the power and you lower the collective, and you've got just enough kinetic energy left in your rotor system so that right before you touch down, about 8 feet off the ground, you pull up on the collective, which increases the rotor pitch. It slows the rotors down, but it also slows down the rate of descent. There's just enough power
So
left in there
so
to cushion you
roughly,
down.
yeah. How
You'll,
hard? will
you'll
you
descend about 1,500, 2,500 feet a minute, somewhere in there. Then right before you get to the ground, you'll just touch it
Splat.
down.
What's your minimum
Airport.
size?
What's that?
What's your minimum size?
2 million. We don't have many.
Gosh, I'm
yeah.
about 1,980,000
You're
short.
close. You're close.
Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Brian Burke, and we have been in the studio with Bruce Robbie from Collins and Company. Bruce, we forgot to have the listening audience find out how to get a hold of you if they have money to invest.
Edward, that's a great question. Well, I made it easy. I created a little website. It's called havecoffeewithbruce.com.
Are you serious?
That's it. Yeah, havecoffeewithbruce.com, and that's a nice little introduction to what we do and our services, and that's a great starting point to decide if there's
I
any
love that.
reason for us to
I
get
do like that. That's pretty cool.
That
Have a cup
is.
of coffee.
And
That's
all
the
of a
first
sudden,
step.
there's going to be a run on .coms for
Yeah.
have coffee with names, right?
Yeah, but he's going to have to buy a lot. We have a lot of listeners. He's going to have
That's
to
a lot
buy a
of
lot of
coffee.
coffee.
Well, it's a great place to start. There's some videos there and also some information about the types of service we provide. So if
Okay.
your listeners are interested, I'd be more than happy to check in with them.
Okay, terrific. Okay, when we get to the second commercial break, we ask this trivia question. Name the 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube that takes place in South Central. Because remember, it's gangs in the movies. And the name
There's
of...
gangs in South Central?
Just a couple. Bruce, I think you knew the